Hey, everybody. Good afternoon. Thank you, David, once again for inviting us to the timing research. Always a pleasure to be here. And today I'm going to talk about, in line with the idea of trading psychology and planning and discipline and everything like that. This is, if I had to boil everything down to 7 steps that everybody needs to accomplish before they can be profitable, this is kind of this is my attempt to go through this. Now, this is not something you're going to watch a presentation like this and all of a sudden, boom, instantly you're profitable. This is something that you have to work on. And my hope is that something that we're going to cover today sparks something for you, puts it together for you, and allows you to start on that journey. So some of you may know who I am, some may not know who I am. Again, my name is Doc Severson. I've been doing this almost at gunpoint since 2005. I quit my job back then. I quit my 6-figure job and started trading for a living at home, and started getting people knocking at my door saying, I want to do the same thing too. Can you show me how? And one after another. And pretty soon it was like, you know what? I really enjoy doing this because trading is a very isolating business. And this is why a lot of us do what we do, is we help others. And it not only fills up the day, but it replaces that social element that you used to have at a job, and all of a sudden it's you and the dog working from home. So I've been doing this again, like I said, for about the last 16 years, and I've been, the current services that I offer these through is ReadySet.trade, as well as ReadySetCrypto.com. And you might have heard of me at Options MD or TheoTrade or Doc's Trading Tools, or even the old options linebacker from once upon a time. And my specialties are multiple time frame price analysis through fractals, options and futures strategy, and by default, out of necessity, trading mindset as well. And because of this, I wrote a couple of books about not only the trading mindset, hacking the Holy Grail, applying neurolinguistic programming and mindset analysis to the field of trading, but also this is my multiple time frame fractal energy trading methodology was put into a book last year. So these are both available on Amazon.com. If you have any questions as you go through this or at the end of today's session, you can always reach me, doc@readyset.trade. All right, so that's who I am. My purpose today, been trading the live markets every day since 2004. I've made every mistake that a retail trader can make. Much of what I'm sharing today was learned by necessity at great personal cost. A lot of people told me what to do, and I was like, yeah, whatever. And I had to go make my own mistakes and learn from them. And unfortunately, many of you will have to do the same thing, but hopefully I can cut some time off of that for you. So what I realized was I wasn't really trading against the market. The market's just out there every day. It's not really your opponent. Your opponent is yourself. So again, my purpose today is to help you understand why you've been your own worst enemy when it comes to your own trading performance and what you can start to do today to fix that. Okay. So we'll probably wrap up at about 45 minutes after the hour, maybe as late as 50 after the hour. So we'll get everybody back in time and get you to the next section. So what's the problem? What's the problem that we're all trying to solve? I mean, this is what I do. I'm a former engineer, so we always attack things by examining what the problem is, try to break it down, and then one by one, we can smash these problems into something that we can do. Now, what I'm going to share with you here is a progression that I heard about a long time ago by this guy by the name of Bo Yoder, who lives up in Maine, I think. And I conversed with him, and he was okay with me sharing this way back then. I hope he still is. But he boiled down the progression that every retail trader goes through into 6 specific stages. And I'm going to share those with you right now. We all start with what's called mystification. You're brand new, you don't know how markets work, and you view trading as fun and exciting, and you're a couple of successes, and you're out there with a tape measure in your garage, making sure the Lamborghini will fit in there, right? So we've all been through this sort of that magic time where everything is so exciting and fun, and it seems so easy. And the problem is you go all in with everything that you have. I think they call that the YOLO trade these days. And you get crushed when the markets turn. Unfortunately, we see this happen all the time. Then you get into what's called the hot pot stage. So, all right, you got crushed, but you're still hooked. You start to define your approach and you learn how markets move. You wait for your setup, but just like touching a hot stove, you get burned every time that you enter and you start getting timid. You decided the problem is the strategy, not you, so you keep trying different strategies with the same result. What I have found is that most retail traders will sign up for some kind of a program. They'll try maybe one, maybe two trades, and for various reasons, which I can go into at length here, you may not get the same results as the person that's sponsoring that trade or the guru or the service or whatever. And it's because you're trading not to lose instead of trading to win. But you don't know that yet. So all you see is a couple of losses and you say, well, this is terrible. This doesn't work. Oh, look at this program over there. Oh, look at this bright, shiny penny over here. And so you go thundering over here like everybody else, and you sign up for this program. And guess what? You take a couple of trades with this, and they don't work out either. Meanwhile, you see this other bright, shiny penny. Wow, that's the problem is I need to be doing what this guy is doing over here. And you go running over to there, take a couple of trades, same result. Eventually, maybe you even find yourself back to where you started a year or two later. And it's frustrating. I see everybody going through this same process. The hot pot stage, every time that you touch that stove, you get your hand burned. And, you know, at this point, you're starting to say, you're putting together this condition that every time I take a trade, I'm taking a loss. And this is a phase that everybody goes through, the hot pot stage. Then you get to what's called the cynical skepticism stage. And I can spot somebody with this a mile away because they're negative, they're angry, they're bitter, they feel betrayed by the markets, they feel betrayed by the market makers, the gurus, whomever you want to make into the enemy here. It's somebody else's fault, right? It's the Fed, the market makers, the brokers, the gurus, HFT. Some people never exit this stage. They quit and hurling invectives all the way out the door. You probably know a few people like this yourself today. Maybe you're one of them. You're convinced that somebody has the keys to the castle, and if they just give out the keys to the castle, it would be all better. Or maybe you're saying that, well, if I just had more money in my account, I'd be able to get over this. That's my problem. I'm underfunded. Well, that may be part of the problem, but not all of the problem. Cynical skepticism is where you're blaming everybody else but yourself for what's going on. Now, if you don't get out of this stage, if you don't start taking accountability for your results, this will end poorly. And I think we all know that. But eventually, some people do get out of this stage and they go to what's called the squiggle trader stage. This is where I think most people that I work with are found. The squiggle trader stage is defined by you saying to yourself, you know what? Just one more study. Oh, look at that study. Look at the Arun oscillator, or maybe I should add the RSI 14 or the ADX. Oh, look at that, the ADX with the plus and minus DI lines. Or look at those Bollinger Bands. And man, if we stick them inside the Keltner channels, that forms a squeeze. You know, all this, you know, we fall in love with all the visual elements of technical analysis and indicators and what they can do. And then we can program them. And then this feels like our old job, right? Where we were in control. All of a sudden we've got control again because now we've got to boil down to some kind of a visual on our charts. The problem is, and this is not that different from what Anka was just saying, is that what you really want to be focused on is this stuff up here that you've compressed up into a little, almost barely recognizable line up there because that's the price. And all of this stuff down here, these are delayed, lagging indicators. And this is where I see if one chart study is good, then 8 of them must be better, right? So this is where you become paralyzed. You're scared money. And this is where I find a lot of people will get stuck for a long period of time. They keep bouncing between, well, I was using multiple time frames and now I've gone back to the squeeze indicator and now I've gone to tick charts and now I've gone to time charts, and you're just bouncing all over the place. There's no real path to where you're going. You just keep looking for the Holy Grail. It's not out there. It's between your ears. That's where the Holy Grail is. Remember, we're not trying to predict the future with technical analysis. We're just trying to spot patterns. We're trying to spot herd behavior that we can take the opposite side from. That's it. That's all there is to it. We're trying to set up a decision framework for ourselves. But meanwhile, everybody's looking out there for the future. One more study, and that's the squiggle trader phase. Now, this is where a lot of people get stuck, and you will not make money over time if you're stuck in the squiggle trader phase. You'll be lucky to break even if you're in the squiggle trader phase. Now, you might feel like you're getting somewhere as you learn more about your studies and things like that. And that's part of the learning process, but ultimately you're not going to be successful until you get out of this phase. And where you need to get to is called the inwardly bound stage. Traders that survive all of the previous stages have a chance to become consistently profitable if they manage to graduate to this stage. They understand that the holy grail of trading is not some chart pattern or study or strategy or anything like that. It's their ability to understand that trading edge starts with them. You're not trading versus the market. You're trading versus yourself. And sometimes it may take you quite a while to understand that your biggest opponent is yourself. This is the inwardly bound stage. This is where all of a sudden you start taking responsibility and ownership for everything that you do. And you start to really focus your efforts towards what it is that you want to do. You've found yourself. This is the inwardly bound stage. So my challenge to many of you out there today is, do you know who you are? Do you know what your method is? Have you found your one thing yet? Okay, so a lot of you say, well, yeah, okay, great, Doc, but I want to skip those stages. I want to go straight to inwardly bound. I've never seen anyone skip a stage due to the way that our brains think. However, I've seen some exceptionally committed traders minimize their time in the earlier stages. Spend a brief period of time and then graduate to the next stage. So understand those stages and try to figure out where it is that you are today. The sooner that you can get into the inwardly bound stage, the sooner that you will be able to earn your fair share and quit funding somebody else's account. So let's see how we can do this with the 7 steps. Everybody with me? Okay, step 1. You've got to think differently about risk. What's the first thing that comes to your mind when I say the word risk? And oh, by the way, if you have never seen this movie, this is called Free Solo, and talks about Alex Honnold climbing El Capitan with no ropes at all. I forget how many thousand feet that thing is tall, but he made it in like a couple of hours. And it is the most gripping documentary you'll ever. I was curled up in the fetal position in the theater watching this thing. I thought in any second, I knew how the movie ended, and I was still scared out of my mind for the guy. So what's the first thing that comes to your mind? What is it? For me, it would be being 3,000 feet up a wall with no visible means of support. But it's quite different when it comes to the markets, right? But I'd say just about everybody out there, when you say the word risk, risk is bad, isn't it? Risk is a bad thing. We spend our entire lives trying to get rid of risk. Our parents start off when we're little kids, Johnny, don't go out in the street, you'll get hit by a car. It's too risky. Oh, the weather's bad. It's too risky for you to drive out there. Blah, 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 blah. You know, I mean, everybody does it out of love. They're trying to protect you. And it certainly does make good common sense. But all of this conditioning about risk is bad is killing you when it comes to your performance in the financial markets. All of a sudden, you're expected to just embrace risk. It's not going to happen. Risk is a tool. So we come to trading with the same attitude that risk is a bad thing and we should do everything to avoid it. This is where everybody starts, right? We're programmed out of the womb in the wrong way. So we start trading not to lose. And this is the death knell of most trading accounts, is when we start trading not to lose. We wait until everything feels just perfect, which, oh, by the way, means that there's no edge in the trade because you're trading with the herd at this point. But think about this for a second. How many times have you seen a team go into play prevent defense and that prevents the win? They get up to a big lead and then they get conservative and they stop attacking, and everything that gave them that lead to begin with, they've stopped doing. And all of a sudden you can feel them back on their heels, just like the Atlanta Falcons versus the New England Patriots a few years ago in the Super Bowl. You knew what was going to happen. You could just feel it. They were playing not to lose after getting up a big lead. There goes TB one more time. So new retail traders don't trade to win. They trade not to lose. They have to learn how not to do that. So fear rules our decisions. So a lot of people talk about fear and greed ruling the market. I think it's all about fear. It's not about greed. You got to get good to get greedy. We focus on what we fear, and what we focus on expands. If we focus on not losing, what do we get? We get more losing. We fear that rallies will leave without us, which is FOMO. We fear that sell-offs will destroy your account. That's fear of loss. Fear rules every retail investing decision. So what we do is we eat like a bird and we crap like an elephant. So for most, it's very common that we have small wins and we have these enormous losses. Oops, that one got away from me. That's because we're trading with scared capital. We take small profits off the table before they can reverse, but we'll ride losing trades down the rabbit hole for many different irrational reasons. Well, I just know it's going to reverse. Or the Wall Street Bet subreddit said it would bounce. Well, I trust those guys. Well, it's just a paper loss for now. It's not an actual loss until I close the trade. So no reason to book it right now, right? So it goes on and on and on. We eat like a bird and crap like an elephant to begin. We have to understand that there's no reward without risk. If you want zero risk, try passbook savings account. That's one of the first questions. A lot of people that call me up out of the blue and say, hey, Doc, I heard you have, options trading. What's the safest, most conservative strategy that I can play? And I'll look at them in the eye and say, it's called passbook savings, money market fund. That sounds perfect for you. If you want zero risk, you're going to have zero return in today's market, right? So more risk should lead to more reward. A professional looks at risk as just a tool. It's not something negative. It's just a tool. It's like the fuel that you stick into your car. By itself, if you throw a match at it, you're going to explode the entire service station, right? You're going to light it up like a torch, like a Rambo movie. But done correctly, that extremely volatile fuel can transport us for hundreds of miles. It's the same thing. It's risk and reward. So a lot of us do this thing where we think that we're being conservative and we think that we're being disciplined, but we will only take trades that feel good. Really, emotions do rule our trading quite a bit. It's very, very difficult to separate emotions from trading. So if you're taking supposedly low risk trades where everything lines up just perfectly, chances are you're going with the herd. This almost always means you're going with the crowd because all of a sudden it feels good, right? This trade feels good because you're getting endorsements from everyone else. Oh, that sounds like a great trade. So conversely, what you have to learn to do is to take the trades that feel bad. Taking a trade that feels bad means that you're going against the crowd. So you have to learn to think differently. That's what this section is about. Step one, you have to learn to think differently about risk. And unless you do this, if you try to use the same old techniques that you've done with risk management in your life and your career and your family life and everything about your personal life, you will fail at trading. This is where people can't get over this point. You've got to think differently about risk. Think about risk being our friend, not a foe. It's just a tool. We'll learn that taking trades that feel bad means that we're trading against the crowd, and that's almost always a good thing. Okay, step one, think differently about risk. Step two, specialize and focus. All of the messages out there tell you to diversify. Well, you must run a well-diversified portfolio. I mean, how long have you heard that stuff, right? Everybody hears that stuff. All of the TV commercials and, right? And so I tried doing this. When I first started trading, I probably had 50 positions going in my trading account. I didn't know what I was doing. It's one thing to enter them. It's a whole different thing to exit those with a profit. This makes you a jack of all trades and a master of none. You will not get anywhere. You're going to spin your wheels. You're going to make the broker happy. Your competition are professionals. They will typically specialize in one form of trading, one instrument, one time frame, perhaps one time of day. I'll never forget seeing the SPX pit at the CBOE. And these dudes would stand there all day long in their 1 square foot of real estate on the risers, and they would own one option, one series. That's it. That's all they would focus on. Just one thing. That's all they did all day long. And they made a living from it. They waited for other people to make a mistake, they wander into their trap, and boom, they got them. It sounds evil. It sounds mean. A lot of people say, oh, well, that's not nice to do something like that. Well, that's life, right? This is capitalism. You want to be a professional, you have to be able to take advantage of the opportunities out there. That's what these guys did. That's your competition. They're snipers. So you are probably not focused. You've probably got thousands of things going on at the same time. You're trading several different strategies using different instruments and different assets and different time frames, 10 studies on your chart, and wondering if you should add more because you're a squiggle trader guy. You're hoping that the winners compensate for the losers. And you're probably doing this during work hours at your job or working from home and trying to do 13 things at once. And you wonder why your competition is working or is winning, and you're funding their accounts and you can't figure out why. It's all about focus. There's a movie that came out, I don't know, maybe 25 years ago. It's called City Slickers with Billy Crystal. And it's got this one fantastic scene in it. And perhaps you need to watch a little bit more of the movie to understand the scene. But these guys are these New York guys that go out to a dude ranch and they're all screwed up upstairs. They can't figure out their lives. Their lives are all just a mess. And this one cowboy has got it all figured out. He just does one thing. So I would say search Curly's Law in YouTube and find that there's like a 2-minute segment, which I think is just priceless. Because my trading did not turn around until I literally swept my desk clean and said, I am sick and tired of this, because I was that typical guy that I knew a lot of stuff, but I wasn't making any money. I was a jack of all trades and a master of none. And I literally swept my desk off and said, all right, back to the drawing board. I'm starting from scratch. I'm going to do one thing only. Give me a ping, Priscilla, one ping only. And that's what I did. I did one thing only on one chart, one strategy, and I did it again and again and again. And what you'll find is that if you do something like that, you will very quickly get into that inwardly bound zone, if not mastery, which is one step beyond that. Find me another profession where a rank amateur can compete against a seasoned professional on day one. Focusing on one thing will help you get there faster. This is what you have to do. If you're having trouble getting consistency in your profits, this is what you've got to do. Strip it down, man. Search Curly's Law on YouTube. Find your one thing. That's step 2, specialize and focus. Step 3, you've got to define your edge. If you met me in an elevator for 30 seconds and you said, yeah, I'm a trader. Really? Okay, cool. What do you do and what's your edge? And if you don't have an answer to that, you have no edge. Understand that there's no trophies awarded based on how long you've been doing this. So a lot of people say, well, I've been trading for 10 years. Okay, is that 10 years of actual market experience, or do you have 1 year of experience 10 different times because you just keep bouncing around to different things? Edge is not automatically awarded by length of service. And also, oh, by the way, what worked 5 years ago does not necessarily work today. Markets change all the time. They change their stripes. People that are in the cynical skepticism phase blame the market for that. Well, the stupid market changed. Well, why aren't you changing with it? Adapt, adopt, and improvise. Don't think of trading as personal combat, that if you win, you're taking something away from somebody else. Think of markets as just this massive river of opportunity flowing by. You're just taking a little bit of risk out. You're just taking your fair share. You're adding to it. You're being paid for taking risk out of the market. It's a job. It's just like an insurance company. That's all. So what's your edge? What is your competitive edge? When the crowd goes one way, what is your case, or what is your edge to either move with or against that crowd? Trend trading and time decay are two standard edges, but being on the other side of a panicked herd of traders is surely the strongest edge of all that I have seen. To me, chart studies are not enough. A lot of people say, well, my edge is I'm using the MACD with the stochastics, and I'm looking for divergent price behavior on, blah, 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 whatever their answer is to that. But this is not edge. Studies are just lagging indicators of price behavior. And rarely do they provide edge. It's a lagging signal, that's all. It's just confirmation of what you should be able to pick out of in your price, which is Anka's point a few minutes ago. So the combination of, and this is a Alexander Elder thing where he talked about the three-legged step stool of method, mindset, and money management. So if you have a three-legged step stool, you've got to have all three of these in equal length. Otherwise, the whole thing falls down. Or if you only have two of these, it's only going to stand up for a certain period of time. Mindset, money management, and method just might give you an edge against the rest of the market if you specialize in it, if you have your one thing defined, if you master that. So again, the very best edge is being on the other side of the trade from the investing herd. Coincidentally, this is the most difficult place to be. This is why all those guys that are in Wall Street bets and all doing the same exact thing as each other, well, so-and-so told me that I should go long. Okay, what kind of an edge is that? And you just see it, it just breaks my heart to see these people in there every day like, hey guys, what should I do? It's almost like that scene from Animal House where Flounder is like, are you guys playing cards? What? It's difficult to go against the herd. We are social creatures. We love going to things like football games and baseball games and soccer matches and cheering along with the crowd. We want to root for our team. It's very difficult to go against the herd and to have that edge. It may take years for you to learn that. I'm still getting better at it. It does not come naturally. All right, that's step 3. That's your edge. Step 4, create your plan. Do you want to make a business of your trading? A lot of people say, well, I want to run this trading like a business. So they go out and they write up a business plan, and then it sits on the shelf. It becomes shelfware. Your competition is more than likely a firm, right, with risk managers and business managers. And you bet they have a plan. So if your plan is, well, I plan to make money, thanks for playing. You may continue the process of funding other people's accounts. That's not good enough. The important thing here is that when you write up a business plan, when you actually take the time to start running this like a business, it sends a very important message to your subconscious brain that says, ooh, this guy's taking this seriously. This doesn't represent as much risk as it does before, right? Think about that for a second. If you're running it like a business, that's not risky. And then, of course, you got to have a trading plan. You should have one trading plan. Don't have 14 different trading plans. Have one trading plan for your one thing. If you're having difficulty getting going, boil it down to one thing. You can do one thing, and you can do it really, really well. That's step 4, create your plan. All right, now we're up to step 5. This is where I see so many people, again, I talked about this before, is that you'll learn about something, you maybe take a couple of trades, and if they don't pay off, then you're off like a rabbit to something else. You quit. But what you've got to do is you've got to get into this strategy development cycle. You got to start out with your goals and determine what your rules are in your plan. Take a trade, get some results. And then instead of beating yourself up for losing the trade, understand what's the root issue. What did you do right? What did you do wrong? What are you going to change the next time you do this? You know, there is a reason for a steering wheel being on a car. Roads aren't just straight, right? We have to make corrections all the time to our direction. We have to accelerate. We have to slow down. We have to make corrections in the vector of where we're going. And so once we get through this, we may even revise our goals. Well, making 10% a day, that's just not realistic. It's making me risk way too much, and that's making me uncomfortable. So let's dial this down a little bit. Let's see if we can change our rules a little bit, and then let's go for a different result. Was that any better? And so the whole idea here is that you're going through this sort of continuous development process, which keeps raising the bar. Your performance continues to go up as you keep going through these cycles. And this is the key that I see a lot of people not doing is, again, most retail traders will give it 1 or 2 shots. And if they don't get immediate feedback to this, well, okay, this is just not working for me. Something's wrong here. Instead of taking ownership for it, they quit and they run off to something else. Again, they become a jack of all trades and master of none. You got to find out what really lights your fire. As Brett Steenbarger would say, what gives you the rage to master? So think about this. What is your ability to adapt, learn, and improve that separates the amateur from the pro? Are you going to be a pro about it? Look what they do in sports. I mean, Tiger Woods when he was playing, when he wasn't all busted up like he is now, poor guy. But he would come back from a round and he would go straight to the range and he would work on one specific thing that he wasn't happy with. Or guys that are true pros are also really, really good at shooting free throws when the game is on the line. It's not only muscle memory, but they're also looking for small, noticeable improvements. This is where edge comes from. They want to win. And in trading, you can do the same thing. I mean, this is typically what I will do is when I'm running a strategy, I will set up the individuals, so I'll have maybe a couple of different types of setups, and then each of these represent the actual trading rules. Did I follow the rules or did I make a violation? Did I follow the rules, or in this case, like a runner stop was too tight? And this led to bad performance. Okay, so this is where you build up a Pareto chart and understand the 80-20 rule, understand the 20% of things that are going to make the 80% of the difference in your performance. This is where the pro will put in the time and understand the performance and find ways to get better at the same thing. This is really, really key. Keep score of what you're doing. understand your performance numbers. And what you'll also find is, instead of just sort of sweeping it under the rug in terms of your losses or wins or anything like that, most people sort of know what they are. But when you start keeping score, again, this sends a message to your mind to say, hey, we're taking this stuff seriously. And all of a sudden, you do become more disciplined when you start keeping score, because you become the type of person that you want to be. Be a pro, keep score. All right, that's step 5. Iterate and improve. Step 6 is about your mindset. You've heard all of this about the trader's mindset, and most people just scream at you, well, you've got to be disciplined. But here's a little secret, is that it's not about just forcing yourself through willpower to be disciplined. That doesn't work. If it's not in line with who your subconscious mind thinks that you are in terms of your belief system. Who you think you are is everything. And so one of the things that drove me crazy was why I would do these stupid things during the day. Like, I know I'm not supposed to take that setup, and I've got the rules stapled to my forehead, and I still did them. Like, what the hell is going on? Why was I doing stuff like that? And so what that led me to do is like, what's going on inside the brain that's making me do these silly things? And this kind of led to my study of neuroscience. It's not like, I mean, I just read a couple of books about it, and it really kind of woke me up in terms of who's really in charge of your mind and your actions. And it's all about neuroscience, guys. This is called neuro-linguistic programming. These are relatively new fields, although they've been around for a couple of decades. But there's all kinds of resources to help you about this. So if you have results that don't make sense to you, this is because you're neglecting on how your brain actually works, how the decisions actually work. Right? So this is why you just can't go up to a smoker and say, quit smoking now. Or go up to somebody that might have a few extra pounds on them and say, you know, you should lose weight right now. It's not that easy, right? You have to become the person that you want to be first before the changes will happen. What you focus on will expand. Again, we talked about fear before. If you're scared of trading, what you focus on will expand. I'll never forget this one time that I had just to give an example, I had what's called a bear call spread. It was a bearish trade. The price was way down here, and I sold this bearish trade that needed the price to be below that. And as soon as I placed the trade, it was almost like putting a bullseye on the position. I'm sure you guys have felt like this before. The price started just going straight at it, almost as though it waited for me to enter that position and then immediately went after it. And that's all I could focus on every day and every night. I'd wake up at 2 o'clock in the morning. I'd get up downstairs and I'd go check the futures again. Is this thing going after me? Is it still after me? And what I missed out on was, during this whole time, well, okay, the market's trying to tell me something. What about this move here? Why couldn't I have done something with that move? If we're scared to death, all we're going to focus on is what we're scared of, not the opportunity there. So stop pushing that piece of string across the table. Learn to pull on that piece of string by focusing on what you want, not what you don't want. Okay, and it's not just semantics. It's not just clever language. It really does make a big difference. And you've got to retrain your brain. Your subconscious brain is the core processor of your most basic decisions. It's there to help protect you. It's this inner voice that thinks risk is bad, but you can't just program it like the Matrix and jack something in the back of your skull and, in 20 seconds later, you've learned how to do it. So this is why I wrote this book, Hacking the Holy Grail, about how to crack into profitability and how to retrain your brain to think differently about what it is that you want to do. Prove it that your trading is not harmful to it. And all of a sudden, you'll start to see different results. So that's step 6, build a trader's mindset. And again, guys, the only reason that I know about this stuff is because each one of these steps I had to go through myself. I am a flawed human being. I have made every single mistake that you can possibly make in trading. The difference between me versus a lot of other folks is that I didn't quit. I tried to figure out what the hell is the problem here? Why am I doing these stupid things? And the answer was quite simply inside of me. So now we get up to step 7. And this is about making small changes. I'm not expecting you to listen to this presentation today, and maybe you're down here and you want to be up here. And then immediately, just all of a sudden, you flick a switch and you're up here. It doesn't work that way. Life is not a step function like that. It doesn't happen in athletics. It doesn't happen in the financial world. It's a slow, continuous progress filled with pullbacks along the way. But those that stick with it will get there. And it's based on your habits. And this to me is like one of the coolest, this is the state of the art in terms of human performance lately is habit. And there's actually a couple of great books. I had the fortune to meet this guy a couple of years ago for lunch before his book got published. He lived in the same town, and his wife and my wife used to work together. And so we got together for lunch, and just the guy has just exploded over the last 2 years. So he's still #1 on a New York Times bestseller list in terms of nonfiction. Atomic Habits. If you haven't read this book, please do so. And this one's not bad either. It's by Scott Adams, who is the cartoonist for Dilbert, who's actually a really, really smart guy in terms of how to create process in your life. So a couple of really, really fun reads, really empowering reads. Well, you can thank me for it later, right? So a couple of takeaways from this. You don't rise to the level of your goals. So many people just say they write down their goals and okay, that's it. And it doesn't work that way. Just because you write down big goals doesn't mean that you get pulled towards them. You fall to the level of your systems. Goals are for those that want to win once. Systems are for those that want to win repeatedly. I don't know about you, but I want to win repeatedly. This is why I put systems into place to exercise my goals. And then Scott Adams puts it more bluntly, goals are for losers, systems are for winners. If you look at every successful trader or athlete or whomever that you want to pick, they've got a system. It just didn't happen to them. They've got a system. They worked their butt off to get where they're at. Identity is extremely important. If you think in the back of your mind, hey, I'm just a lowly retail trader, I'm probably not going to be successful, this is probably not going to work. Well, guess what? You're not going to be disappointed. You got to change your identity in terms of who you think you are. Every habit that you take is a vote for the type of person you want to be. You want to be a profitable trader. What would a profitable trader do? Start acting like one. Don't try to cheat the system. If you want to be a profitable trader, start acting like one today. Don't wait till tomorrow. Do it now. And don't discount what can happen with small wins. Becoming a profitable trader is not something that happens in a day. It comes from the aggregation of these small incremental changes to your actions and thoughts over time. This is a thought from James Clear, which is called the aggregation of marginal gains. Little tiny wins every single day. Did you know that a human being will stick with something as long as they feel that they're making progress? And this is why people quit after a couple of trades. Remember this thing here? They quit after a couple of trades because they don't feel like they're making progress and they feel like time is ticking by. But imagine if instead of the 2 big losses that they got a couple of little wins. Do you think they'd stick with it? Yeah, they would. Couple more little wins, little wins, little wins. Even if the win is more of a moral victory. Hey, I didn't lose any money on that trade. Hey, it's a little win. The human mind craves steady progress, and even small wins count to keep you motivated. So maybe you're shooting too high. You want to be profitable by next month, so you quit your job and go do this. Okay, everybody feels like that. But break it down into small little things that you can accomplish and make those little wins. Do you realize that if you got 1% better every day, 1% better every day at something, that you would be 37 times better at that by the end of the year? So if I go to you and say, do you think that you could get 1% better at your trading strategy between today and tomorrow? Most people would say, oh, no problem, Doc. I can do that. Piece of cake. Okay. Challenge accepted. Do it. And then the next day, do it again. And then the next day, do it again. Do it again, do it again, do it again. Keep doing it. Keep showing up. Keep getting better 1% every single day. You cannot help but be successful at the end of the year if you're 37 times better at something than you are today. But most people will not put forth the level of effort to keep coming back every day. You see where I'm going? Small wins add up over time, guys. Okay? Read these books. They're awesome. And that's step 7. So I can't guarantee you that if you go through all these steps that you'll be successful, but man, you're going to have a much better outlook in terms of where you're going. Identify what your problem is and understand the steps to take. But if I could boil it all down to one thing today, there's one thing that you could just take from today's presentation and take it forward, is find your one thing. Boil it down to one strategy, one thing that you're going to do and to master at. Quit trying to be a jack of all trades and a master of none. Find your one thing. Okay? So if you need help doing that, you're welcome to hook up with the service that I have at ReadySet.trade. So if you go to elite.ReadySet.trade, and I'll type this in so you can go right there. This is free. I'm not going to charge you anything. I am not going to spam you at all. You're welcome to get on our platform. We've got a number of free courses. We have additional stuff. We've got a subscription room if you want to join it, but I'm not going to harass you on it. So join our free tribe at elite.readyset.trade. This is what we call the 10X tribe. We've got all kinds of information out there about human performance as well as our trading that we do. Oh yeah, we do some trading too. Okay, so I've got a few minutes left here. I think I came in right around where I told David I would terminate my discussion. So that is the material that I have, and I'll be willing to stick around for a couple of minutes and answer any questions. So Jackie is saying, I feel like you're inside my brain talking about my trading. I get that comment all the time. And it's really kind of odd, Jackie, that most of the people that I work with all come with the exact same issues. It's almost like everybody is stamped off the same assembly line. Now, of course, everybody's different, but it's the way that society processes risk management and risk avoidance. That means that we all start from the same place. We all start from this. I mean, I can't imagine what it would take, what kind of parent. I have 3 kids myself, and what do you think I did? You know, I wasn't kicking kids out the door. You know, go on, learn how to skydive. You're 6 years old, for God's sakes. You know, it's not like that. I mean, we're all doing that as parents. We're all trying to keep our kids safe. But then all of a sudden to pivot and say, okay, since I want to be a trader now, I'm going to think differently about risk. Most people don't know how to think differently about risk. And it starts by identifying one thing. It really does. Let's see, PE is saying step-by-step is nice, but many times things happen in different level clusters of steps. What is your take on that? Well, I'm not sure if I can give a 1-sentence take on something like that. So what you're saying is that things are complicated. Okay, I agree with that. But what I do think is that you can simplify. you can break it down and simplify. And it's going to make it much, much easier on you if you do something like that. Silver, thank you very much. Appreciate it. Are the courses included in it? If you go through the monthly membership that we have, which is really reasonable, which you can sign up after you get on the free platform, you can troll around, you can see what's out there, you can kick the tires. But if you sign up for the monthly membership, everything is included. Everything. All right. Okay. Thanks, everybody. I appreciate the privilege of speaking with you in front of you again. And I would welcome anybody that wants to reach out and talk to me about any questions or anything else that they have. This is what I do. This is all I do. I love what I do. And I hope you guys have a great week. David, back to you.